Mark Mobius, or I should say legendary Mark Mobius, Executive Chairman of Templeton Emerging Market Group, joins us. Mark, what a delight to have you back on ET now. Mark, before I get into specifics of India, I want your view on global environment, because for the moment it appears that global markets are on a very strong track and a strong wicket. Irrespective of all the bad news, markets are just moving from strength to strength.
Exactly. That's very typical, by the way. Usually these bull markets are built on a wall of worry. It's when you have euphoria that you have to worry about the markets coming down. But right now, the markets are on a roll. And of course, the reason for that is the great deal of money in the financial systems around the world. Not only the US, but Europe, Japan, and other parts of the world.
Mark, hi, morning. For the moment, it appears that the US Fed and ECB are likely to follow a different path, Fed may be in the process of contracting its balance sheet, and ECB is looking at expanding. Mario Draghi has said that, he would do whatever it takes to fix EU. What implication do you think it will have on global equity with two central bankers moving apart?
Well, I think the US will not necessarily contract or reduce the size of their balance sheet. I think they will just taper. In other words, not add more to the balance sheet. So that's a big difference. If they actually contract their balance sheet, then we'd have to worry. In the case of Europe, as you know, Draghi has tried to use words instead of money to get the effect that he wants. And now he may have to put up and actually take some action, but it will be gradual. It will not be rapid. But don't forget, the Japanese are continuing to expand their balance sheets. The Chinese have not stopped either. And other countries around the world are continuing to expand the central bank balance sheets because they don't want their currencies to get too strong. So I don't think the impact of this difference between EU and the US is going to have much impact.
Okay, Mark, let's talk about India. And you know Indian markets more than anyone else. You've been investing in India for what 2 decades now. So broadly as we speak, what is your commitment to India and in the foreseeable future? When I say foreseeable future, next 2 quarters, next 4 quarters, are you looking at increasing your commitment further to Indian stocks?
Broadly, India is second largest of our holdings after China. Thailand is up high in our Asian funds, but among our global funds, India is right up there, along with Brazil as well. And we expect that to increase as we go forward. What we want to see is loosening of the restrictions on foreign investors in the Indian market, and hopefully Modi can do that rather quickly. And secondly, we'd like to see more IPOs, more new companies coming to the market.
Do you think for Indian stock markets, and Mark, a structural or an inevitable bull market has started, or Indian markets are currently going through a process of re-rating and this is not the beginning of any bull market, this is just a one-time adjustment that could be happening?
No, I believe that India is now embarking on a longer-term bull market. And as Modi makes the reforms and becomes more effective in making the changes he'd like to make, this will strengthen the capital markets in India.
Mark, the cornerstone of your investment philosophy in India was centered around financials. And you have a large exposure to private banks. Are you happy to own some of these banks which you've been owning from last 7-8 years?
Yes, because with the economic boom, banks will benefit. So good, well-managed banks will definitely be benefiting from what's happening now. But if you look at our portfolios, you'll see we have quite a lot in the consulting area, in the outsourcing firms like Tata Consultancy. We've got the oil and gas side of things, which we like as well, not only in India but globally. So there are a mixture of opportunities.
Mark, do you think Indian IT companies are positioned extremely well, given that a renaissance period has started in the US manufacturing?
Yes, these companies, these outsourcing companies are very flexible. They move into new areas. They're doing research and development in new techniques, new opportunities. So I believe they will move with the market. In other words, they will not be left behind when companies shift gears and change their strategy.
Mark, you said that you're bullish on Indian IT, but let me just bring to your notice the kind of market capitalization some of the Indian IT companies are sitting on. I mean, TCS has a market capitalization of 5 lakh crore. Isn't that a benchmark in itself? And do you think from these lofty market cap, can these companies still create wealth?
Oh, definitely. There's no question. They have been, and you can see from their earnings growth, they've been doing very well. And, of course, if you look at the market capitalization and compare it to a company like Alibaba or any of these internet companies, you realize that these outsourcing companies are actually in a much stronger position from a longer-term point of view.
Right. Mark, so soon we will also hear from the government in terms of fresh divestment as well. In principle, the cabinet has already approved a share sale, in GC sale as well as NHPC. Would you be actively looking at participating in some of these government papers?
Oh yeah, definitely. We like some of these government companies. ONGC in particular is a very good company. We have shares in that company. So we will definitely be looking at those.
Mark, there is a lot of excitement for within the Indian energy stroke oil sector. For the first time in history, I guess diesel prices are trading at par and oil marketing stocks are making a profit. Do you think oil marketing stocks are now priced to perfection, or given the kind of reforms which have been unleashed and the fact that the financial balance sheet for some of these companies will only improve from here going forward, they still have some more headroom left?
No, we like the oil marketing stocks for the reasons you just mentioned. Liberalization of pricing will be very beneficial to these companies. As the governments around the world, and by the way, not only India, but other governments around the world are giving up on these fixed prices and subsidized prices because they realize they just can't afford it long term, and it encourages waste in usage of these raw materials. So I believe that these trends will be quite beneficial for the oil companies.
Right. Mark, India has two pillars. One is export, which is IT and pharma, and the second being domestic, which is consumption and cyclical stocks. So given an option to allocate fresh capital, would you like to align with the exporters or the domestic players?
We like them all. It would depend on the prices. We have to look at the valuations. Unfortunately, some of the domestic plays are very, very pricey. Some of the others, like the consultancy companies that are doing offshore work, are better priced. But as these things change, we would have to shift our allocations.
How would you rate the first 100 days of the Modi government? Because directionally, nothing big really has come from the government's table so far.
So far, so good. I think they have been moving in the right direction. The selection of the ministers, the fact that he has taken a strong hand in a number of issues and made decisive measures. I think this is all very good and augurs well for the future of his administration. I, of course, would like him to do more in terms of encouraging investment, not only foreign investment, but domestic investment. And that means eliminating a lot of the bureaucratic hurdles that companies have to go through in order to make investments. I believe he will do that, but it will take time.
So what is your view on earnings right now? Because earnings for Indian market companies have yet to expand.
Yeah, you won't see that yet because it takes time for this earnings growth to come through to the companies. And as the economy grows, then you're going to see the impact on earnings of these companies.